What's going on, guys? In this video, I want to talk about how we can stop getting, trapped or exiting positions early due to emotions, due to the fear or anticipation of losing more cash. Before we get into that, what I do want to talk about is we have 9 spots left for the 24-hour free all access pass to the gold member section in Evolution Traders. Once those 9 spots are filled, it will go back to normal pricing. So if you want to get a little bit of a discounted pricing, definitely take part in one of those last 9 spots. Now, what we're going to discuss here is a 20 SMA. And again, I know a lot of you guys are trading this particular setup. Sometimes you're taking this setup with some great success because the market is just moving with you. Some of the other times you're taking this setup and you're kind of getting stopped out. And the move is continuing to go in your favor without you. So we need to get very comfortable with the amount of position sizing that we're putting on the table. Now, I definitely recommend if you're newer to trading or you're still trying to get your feet wet with consistency and you're still trying to figure things out, you need to really pay attention. You have to trade position sizing, meaning contracts that you're going to be able to withstand the wiggle, right? You're going to want to be able to show up to the dance and be able to move a little bit. So what I'm talking about is if you're trading 1 or 2 mini contracts, and let's say you're getting into a specific position, and the trade setup that I'm talking about is right here, right? If you're getting into this specific position and you have no destination for, a quick, 3, 4, 5 point scalp, and you're going to want to take part in a little bit more of this move, you're going to need to be able to withstand the wiggle, right? Because a lot of times you get into these trades, it's going to quickly wick up, it's going to pull back, it's going to go sideways. And if you're not really taking that first cash grab, now you're kind of trapped in drawdown. And the longer you're trapped in drawdown as a trader, the more panicked you become. And the more panic that happens, there's more fear that's creating an emotional response to exit the trade before the trade is technically broken. So what I mean by that is if you analyze this reason why candle that closes over the 20 SMA, it's around 16 points. If we're trading 1 micro contract, it's around a $30 loss, okay, give or take. Now for me, a specific setup with this small of a reason why candle, I have no problem giving it closer to actually the ATR, right? The 5-minute ATR. So how I'm using ATR in conjunction with this is telling myself this. If the average true range is around 19.5 points, well, maybe if I give myself a stop loss of 20 points or the entirety of the reason why candle, if we close below it as a stop, it's going to allow me to have more space on that dance floor to kind of move and shuffle around. So if I take 2 micro contracts, I'm essentially risking at 20 points, $40 a contract. Essentially on 2 micro contracts, I'm risking $80 on this trade. It's not a lot when you're trading the NASDAQ and on the grand scheme of things. If we're trading 3 contracts, you just keep increasing the number, $120. So let's say 1 is okay with risking $100, $120 on this trade. What you're going to do is either tail a stop loss at around 20 points deep, or you're going to put a stop loss just below that reason why candle, okay? Or what you're going to do is actually wait for the reason why candle to get breached and have it actually close below. Now, if I was to drop a line here and kind of pinpoint something to you guys, you're going to see that we get very close to closing below this reason why candle. Now, we would be entering into this trade at 20,529. It drops all the way down to a price of 20,510. So around 19 points from entry to the lowest point, okay? Now, if you're only trading 3 contracts, sure, you're down $100, you're down $120. Allow this chart to tell you that technically it's broken, okay? Technically, it's broken if we breach this level and we start taking out a prior swing low. One reason also that you can hold this trade is because if you're going to enter to this trade here and your previous swing low is down here, look how far away you are from actually taking out the low of day, okay? So all this is a little bit of a sweep, kind of getting you into the position. It's pulling right back to the lows, and then it absolutely explodes. open up that stop loss a little bit so you have room to dance, but size down a little bit. Now, on this particular setup, we're not going to go ahead and take a 5-point take profit if we're playing 3 or 4 or 5 micro contracts. We want to actually target at least a 1-to-1, so it's going to be at least 16 points, or at least the entirety of what we're risking, around 20 points. And if you're trading 3 micros, you're going to make about $120. If you're trading 4 micros, you're going to make around $160. And if you're trading 5, you're going to make around $200 bare minimum, trading very low and stress-free micro contracts. Now, again, you can definitely play minis. A lot of people, and including myself, inside of Evolution Traders, we do trade those mini contracts. In this particular situation, if you look at the high price here of this reason why candle, 205.29 shoots up to 205.39. So there was an easy 10 points on this quick aggressive wick, where a lot of traders are taking 5 points on 1, 2, 3 mini contracts, which could be $100, $200, or $300. So if that's the particular case and you do grab those 5 points, you don't have to sit through this drawdown. But there's some people that don't really like to, to put on that much size. Maybe you want to see this thing work around a little bit, and maybe you want to put on less risk for the potential to make around the same trading those micros. Again, just giving you guys an idea here, but this is definitely going to help you guys from getting stopped out so much and from panicking. Because before you get into the trade, you need to understand how much money you are going to lose if the trade goes in your favor. Think about this. 90% of the time that you're entering into the trade, you're entering into the trade either at the top of the wick of a candle going long or the bottom of a wick of a candle going short. So you're already entering in at the upper or lower extreme of that candle. If you do pull back, look to the ATR, because there's a good high probability chance that you might be somewhere in that upper range of that ATR on a measured pullback or a measured bounce, depending on if you're long or short. And if the ATR is sitting at 20 and you have a 10-point stop loss, or you start to get squeamish around 12 or 13 points, is it the charts that is failing you? Is it the setup that is failing you? Or is it your emotions and emotional attachment to the money that you're looking at on the screen be down in red? This is something we're focusing on a lot. The mindset, the psychology part of this, actually holding this inside of Evolution Traders on the gold members side. If you guys definitely want to take advantage, there's 9 spots left. Jump in, 24 hours free. If you like the room, you like the people, you like me, you like the courses, you like the educational content, you like the voice calls, stick around. If you don't, there's no obligation to stick around after that. I'll see all of you guys on the next video. Again, make sure to like, comment, and subscribe, and I'll catch you guys on the next one.